welcome to the Nokia First Quarter 2021 Earnings Teleconference and Video Call. All participants will be in a listen-only mode. Should you need assistance, please signal a conference specialist by pressing the star key followed by 0. After today's presentation, there will be an opportunity to ask questions. If you're also viewing the video webcast, please remember to mute the audio on your computer before asking your questions, as there is a 30-second delay. To ask a question, you may press star then 1 on your telephone keypad. To withdraw your question, please press star then 2. Please note that this event is being recorded. I would now like to turn the conference over to Mr. Matt Shimao, Head of Investor Relations. Sir, you may begin.
Ladies and gentlemen, welcome to Nokia's First Quarter 2021 Conference Call. I'm Matt Shimao, Head of Nokia Investor Relations. Pekka Lundmark, President and CEO of Nokia, and Marco Wirén, CFO of Nokia, are here with me via teleconference and video today. During this call, we'll be making forward-looking statements regarding our future business and financial performance, and these statements are predictions that involve risk and uncertainties. Actual results may therefore differ materially from the results we currently expect. Factors that could cause such differences can be both external as well as internal operating factors. We have identified such risk in more detail in the section titled Operating and Financial Review and Prospects, Risk Factors, of our 2020 annual report on Form 20-F, as well as our other filings with the U.S. Securities and Exchange Commission. Please note that our results release, the complete report with tables, and the presentation on our website include comparable results information in addition to the reported results information. Our complete financial report with tables available on our website includes a detailed explanation of the content of the comparable information and a reconciliation between the comparable and the reported information. Today's stock exchange release and presentation can be found on the Investor Relations section of the Nokia website. With that, I would now like to turn the call over to Pekka.
Thank you, Matt, and hello everyone. And thanks for joining the call, and I hope you and your families remain safe and well. Well, we have had a great start to the year. It shows we are on track to deliver on the three-phased plan to return us to sustainable, profitable growth. We delivered 9% top-line growth in constant currency and a 10.9% comparable operating margin, a clear improvement year on year. The standout was our network infrastructure business, which had a fantastic quarter with 28% net sales growth in constant currency and a double-digit comparable operating margin. This business group builds on strong technology leadership, and we see robust demand for its products. Solid progress also in mobile networks with increased profitability, growing sales in 5G, and good steps taken towards securing full portfolio competitiveness. So today I want to take you through our performance with an emphasis on how we are attaining technology leadership, adapting to new business models, and addressing new and emerging areas of growth. My presentation will begin with the overall picture, looking at our Nokia level sales, margins, cash, and guidance. I will then drill down into our 4 business groups to explain the underlying drivers. And finally, I will talk about how this first quarter relates to the three-phased plan which we outlined at Capital Markets Day. But let's begin with the Nokia level numbers. And all the net sales and addressable market figures in my speech today will be in constant currency. And for margins, I will focus on those on a comparable basis. First, sales. As you can see from this slide, we made good year-on-year progress in Q1. Net sales increased by 9% to 5.1 billion euro, driven by strong growth in network infrastructure and solid growth in mobile networks. In 2021, we expect our total addressable market growth to be 3% year-on-year. This is driven by increasing consumer capacity demand served by 5G rollouts and by the increasing focus on residential broadband. We also see growth opportunities in the market for enterprise and web scale with IoT, edge, and industrial digitalization. These market drivers were reflected in our first quarter results, in particular in the growth of 5G sales, demand for our network infrastructure solutions, and 18% net sales growth with enterprise customers, which you can see on this slide. This enterprise growth was driven by securing 63 new customers in Q1, more than double the number we secured in Q1 last year. Approximately half of these customers bought our private wireless solutions, meaning we now have over 290 private wireless customers. And regionally, we saw double-digit net sales growth in North America, driven by network infrastructure. We also saw double-digit sales growth in Greater China and in India. This was partially offset by net sales declines in Asia Pacific and Middle East and Africa. Nevertheless, we believe our market position is stable in Asia Pacific and improving in Middle East and Africa. We were pleased to see gross margin and gross profit increase in both regions this quarter. Timing was also a factor here. For example, in Japan, a major service provider is deploying 5G on our competitor's footprint first, and the deployment on our footprint will happen later. Now moving to our key figures, which you can see on this slide. And I was particularly pleased by the strength of our comparable operating margin, which hit 10.9%, up 8.5 percentage points year on year. The improvement in comparable gross and operating margins was primarily driven by higher sales volumes, favorable product and regional mix, lower SG&A expenses, and Nokia's venture fund investments. From a business group perspective, the improvement was driven by mobile networks and network infrastructure. Comparable earnings per share was 0.07 compared to 1 cent in Q1 2020. Reported EPS was 0.05 compared to negative 2 cents a year ago. On cash, we delivered our fourth consecutive quarter of positive free cash flow. In Q1, we generated 1.2 billion euros of free cash flow and ended the quarter with net cash of 3.7 billion and a total cash of 8.8 billion euros. So how does that relate to our guidance? It is clear, of course, that we are off to a strong start for the year, and there is a lot to be excited about. Net sales growth, improved gross margin, strong operating margin, and cash flow. At this point, we are maintaining our outlook for the full year as we want to see how 2021 continues to develop. The solid first quarter provides a good foundation for achieving the higher end of the 7 to 10% comparable operating margin range. What is important to understand is that we expect the seasonality we usually see between quarters to be less pronounced in 2021. The first quarter has typically been one of the weaker quarters for us, and volatility throughout the year has tended to be significant. In addition, there is now less visibility to the semiconductor market in the second half of the year. Due to our robust supply chain management, we have been able to successfully deliver to our customers during the global shortage. But we want to see how the situation develops and continue to give it our full attention in close dialogue with our suppliers. So that sums up the Nokia level results. And I'll now turn to the performance of our business groups. First, mobile networks. As I have mentioned before, our top priority here for 2021 is securing full portfolio competitiveness. So we were pleased to see a solid first quarter with an uptick in profitability and good progress across the business group's focus areas. Net sales rose by 2%. This was driven by continued momentum in 5G rollouts across all geographies, especially in North America and Greater China, offset by a decline in mature radio technologies and deployment services. Comparable gross margin in Mobile Networks reached 33.2%, up 2.1 percentage points year-on-year. The improvement came mainly from 5G and a favorable product mix with a lower proportion of deployment services. The same drivers helped to raise comparable operating margin to 3.4%, up 2.8 percentage points year-on-year. I mentioned that Mobile Networks made progress across all their priority areas. As a reminder, there are three. First, expand our technology leadership for critical networks. Our 5G powered by ReefShark system on chip hit 44% this quarter, remaining on track to end the year around 70%. Second, build and maintain scale through good deal momentum. This quarter we achieved good wins with, for example, AT&T, Do, and the MI startup joint venture in Singapore, just to mention 3 examples. As you can see from the slide, we are on track with our KPIs, including our targeted market